What if I told you that your daily coffee habit is costing you more than it would take to start your own private banking system? Let that sink in. For the amount of your monthly car payment, you could be being your own bank. No lenders, no banks, just you. And definitely no dumb suckers. This is not a place to just store your money. This is a place to solve your money problems. Things like paying down your debt, getting all the money back for every car you buy, drive, and own, starting your own business and investing, and just having fun in your pool that you funded through your own private banking system. So you're probably thinking, how does this work, right? How do I become my own bank? That was a question I had in the beginning too. It's actually pretty easy. It involves changing one thing, and that is where your savings goes first, and then adding one step. Let me give you an example. If you want to start your own banking system, you might be asking, well, how much do I need to start this thing? Simple. Take your age. Let's just assume you're 30 years old. Add a 0 to your age. That's 300. That would be your minimum amount per month to start your own banking system. 30 equals 300 a month. If you're 50, it's the same thing. Just add a 0, 500 per month. That's how we figure out a starting place. Once the money's in the private banking system, you're probably asking, well, then what? Well, that's the easy part. You do exactly what a bank does. If you think about how a bank works every day, you're gonna do the same thing. You're gonna tap your private banking system for a loan. You're gonna take loans to do things like pay off debt. That's where you start. Maybe buy cars. Instead of borrowing from somebody else's bank, you borrow from your own. Starting businesses or investing. All these things can be done from your own banking system without the need for someone else's bank controlling your money. And here's the best part. When you take the money out of your private banking system, the money never left. So while you're tackling your opportunities like paying off debt, buying cars, investing, your money's still working for you, earning interest and dividends in a tax-free environment. And that is where the fun begins. You might be asking yourself, is this a high-yield savings account? Is this one of those Roth IRAs? Maybe a 401k? No, this is something completely different that you probably would never guess. I'm talking about the infinite banking concepts paired with the ultimate machine, none other than a specially designed and engineered whole life insurance policy from a mutually owned life insurance company. Your policy builds interest and starts the compounding process while your money sits. When you take loans from your private bank, you're not actually using your money. The insurance company is loaning you money from their general account, essentially giving you part of your death benefit while you're living. Then your cash value stays in the account, earning uninterrupted compounding interest, which means dividends and interest compounding year over year while your money is being used. And the best part, you get to make money twice on the same dollar. This is the part that most people don't understand. How can my money make money twice? Well, it's simple. You're putting your money in a guaranteed whole life policy where it's earning interest and dividends at a higher rate than what they're charging you to use the capital. So when you take a loan from the insurance company's general account, they're charging you simple interest while your money is earning compound interest. Over time, because of the compound curve, that spread goes up and up and up. And all you had to do was keep funding your own private bank. Seriously, folks, all you do is you take 10 times your age and you unlock 10 times the opportunity. Control your money, control your financing, and harness the power of uninterrupted compounding interest. It's the top secret of the 1%, and it always has been. Now that you know how it works, let me tell you my story, and let me tell you why I don't just have one policy in my private banking system. I have many. When I first started this, I hardly had anything. I was going through an incredibly difficult time in my life. I had no extra money. So my first policy, and sometimes I'm embarrassed, but I shouldn't be embarrassed to say this, I started my first policy with about $240 a month. That was actually under the minimum because I was older than that. I was in my 30s when I started my first IBC policy. Now, I'm not suggesting you do that because the minimum should always be 10 times your age, but I'm simply saying I was unwilling to wait. The time is always now. I wanted to start now, and I did. That first policy might not be the best policy I've ever created because it didn't have enough juice going into it, enough money going into it, but I at least took action and got started. That same policy that I started way back when has been used over and over and over again. It's been used to pay down debt. It's been used to finance cars. It's been used in everything that I do with the infinite banking concept because it's part of my banking system, which now is comprised of 9 different policies. That's right, 9. It's not that I wanted 9, but the evolution of all banking starts the same. Just look at a regular traditional bank. Where do they start? with one location. And then what happens over time? That one location turns into 2, turns into 3, turns into 5. And then pretty soon on every single corner in your town, there's a branch office. Why? Well, because one branch office can only get so much money in deposits from that particular area. So they open another one in another area, which then makes it convenient for that neighborhood, and another, and another, and another. And banks make money not by allowing you to deposit money, but by then making your money go to work for you. By then making your money that you deposited go to work for them. So what we should do with this is start our banking system. And you always start with the first one. And the first one should always start with, what is the amount of money you're saving today? Well, if the minimum is the amount you're saving or the amount you can save, then go there. But if you're saving more than the minimum, well, then change where that money goes and start with that. So we're never going to tell you how much to start with. People all the time, how much should I start with? I don't know. How much are you saving? Where's your money going? How much you putting in a 401k? How much money are you keeping in a savings account? How much money are you putting in that checking account every month that isn't going out to pay for bills? That's the amount you start with. So when people ask me that, the answer is always the same. Add a 0 to the end of your age, and that's your minimum monthly that you should start with. Let's go back to my story about that banking system. A lot of people think it's a race. Like they hear me say I have 9. They hear, my mentor Brent say he's got 29. And they think, oh, I got to get as many as I can. So a lot of people will come to us and say, well, should I start 2 instead of 1? As if having more is better than just having 1. No. If I could go back and have just one banking policy, that's all I would have. But that's just not the way things work in life. As life goes on, we get smarter. We work more efficiently. Our dreams and our businesses start to grow, and then we make more money. But it's a marathon. It takes time. You heard my story. $240 was my first one. My next one was like $560. Then I think $600 and something. And then from there, it just went north. Now I have 9, and that 9 won't be the most. I'll have 10 and 11 and then 12. But I don't add policies just to say I have more. Here's how it works. Remember the example I gave you of this system. Every banking system gives you the ability to put more money through your bank. So if I start my policy with my minimum, $450 a month, that's the most I can ever put into that policy. I can never exceed that because of IRS rules called the Max 7 pay. So if I'm doing $450 a month, and then next year I make more money, now I want to do $1,000 a month. I can't put $1,000 a month into a policy that was designed to hold $450. So that means I got to start a second policy. And then as time goes by, if your income doesn't increase fast enough to keep adding a policy a year, the next part is way more fun. This is the second law of wealth. Your money must work for you. So every dollar I put into the policy, let's use $450 a month, I'm putting that money in. Over the course of a year, I've accumulated several $1,000s. But that money isn't just going to sit in the policy. I'm going to take that money out, I'm going to take it as a loan, and I'm going to make that money go to work for me. Let's just say I then pay off a credit card. Okay? That credit card that I don't have to pay anymore was $100 a month at 20% interest. So now I no longer owe Visa $100 a month, but I took a loan from my bank to pay Visa off. So now I'm going to pay that $100 a month back to my policy as a loan repayment, meaning every month I have an extra $100. That's the equivalent of me making 20% because I recaptured 20% I was giving away. So as I do that, as my money works, now I've got an extra $100 a month. Then I redeploy the money out the next year and I pay off another one. And maybe that one's $200 a month. So now I have an extra $300 a month plus the $450 coming over. And I didn't have to work harder for this money. The first $450 was just the amount that I was saving. I was already used to that. The other $300 that I just mentioned was money that I was giving away that I took back. And as that goes on and on, that amount builds and builds. But eventually you're going to exceed the limitations of the policy design you built. $450 a month, you already heard. I'm way more than that now. So that's how I've expanded my banking system, because money is working for me instead of me working for money. And the same will happen for you. When you start your policy, you'll never just have one. If you have one, consider that a failure. That means your money never went to work for you. And that does happen, but it only happens because you failed yourself, not because we failed you. Once your money goes to work, it will make more money. And when it makes more money, you'll need more capacity to hold that extra money, which means you will have the second policy, a third, a fourth. Does this make sense? In the comments below right now, for all of you listening to this, tell me, how many policies do you have? Do you have one? Do you have none? Do you have 10? Just want to know. Put that in the chat. So let's just do a quick review of what we've gone over. You know, when people ask me what's the minimum amount they can put in, I always start with, let's not talk about the minimum. Let's talk about what the money's going to do for you. What are your needs and goals? Because that's the first thing you need to know and understand. What are you going to use this money for? And what problem is it going to solve for you? The second thing is the minimum. It's truly 10 times your age. Just add a 0 to the end of your age, and that's your minimum monthly. It's so simple. But don't start at the minimum if you have the ability to put more in. Start with the amount that you're currently saving today. Because remember, we're just changing one thing, and that's where your money goes first. So the amount of money you start with should be the amount you're saving now. And number 3, we went over why I have 9 policies and how your banking system will expand the same way a traditional bank's branches expand. You are building a banking system, and a banking system is going to include many branch offices. And it's going to take time for you to build to that. Just like it took me time, it took Brent time, it takes everybody time. So the best time to start is right now. So my question to you, what are you waiting for? Hey, if you like this video, you're going to love this one right here. Secrets of the Wealthy. See you then.